Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, January 13th. Okay, what I want to do this morning is, of course, run through the index charts. But then in the FANG names, I'm going to back out to the daily chart. I think there's some decent longer-term swing trading setups on the horizon that I want to point out. And then I've got three charts at the end on new trade ideas for you. So let's get started. SPY 2-hour yesterday. Price was in this little triangle continuation pattern, and we had a brief moment where price had lost support, came down here to touch the top of the gap at 376, and then quickly bounced. Now, you had to be quick. You had to know your levels, but that was your buy point. You know, right at the top of the gap at key support. So that trade was there. Might have been a hard one to take. You know, you had to be focused on it. You probably needed to have an alarm set, and then, you know, no hesitation when you got it, that, you know, that was your lowest risk opportunity to buy. You would have had to, you know, set your stop just below into the gap and, you know, make your buy. And then you got a nice V recovery out of it. And then you know, there wasn't any, there weren't any candles there to scare you out of the position. So anyhow, I just thought I'd point that out to you. So now this morning, I think anything above 378 is bullish. But then again, if it drops below 378, you've got an opportunity for a $2 short down to 276 again. Here was the deep look towards the top of the gap, and then the V-shaped recovery here. What I want to point out on the indicators is that notice during these last few days, we've had a gentle pullback in the PPO, and now it's basing right at the zero line. That's a bullish setup. You know, when it comes down and resets at zero, if it were to, you know, put in a bull cross here and start reaccelerating to the upside, that's when you're going to get your move out of price. And also notice RSI is testing this downtrend resistance. You get a breakout here in RSI coupled with a PPO bull cross and elevation, you're going to see a breakout here at 379.50, which would open up the door to go ahead and fill this gap up to 381.50-ish, right in there. So watch for that. And then on the downside, if things fall apart, nimble traders would want to get short on a break below 378 and then down here to see how price handles this $2 gap down to the high 373s. Qs were weak again yesterday, with money seemingly flowing out of the large mega cap tech names. And, you know, we've got, you know, this weakness here for the last week or so. There was a nice long entry down here at 312. You know, we broke below and then recaptured it. That was your buy point. Remember, you know, breaking below support and then recovering it, that would have been your buy point. I think today it sets up fairly clearly 314 is your bull bear pivot. Anything above 314, I think you can be long with a target of 317 here at the bottom of the gap. But then if price breaks below 314, I think you can be short looking for 312 and then possibly 310 at the top of the gap. And then, of course, if the gap breaks, then on down to 307. So mark 314 as the key level on your QQQs. And here we just see the exploded view of it on the 30-minute chart. We had the breakdown here at 313.75. Then it came all the way down, undercut this support level at 312.25. You can see that was an important level back here that served as resistance. Here it was support. It broke, but then recaptured it. So you had a good buying opportunity right here on the recapture of 312, and that would have been good for $1.50, $2 up here to 314.50, where you could have covered your position. Now notice here also we've got a pending bull cross on the PPO, just below the zero line. If this were to, curl to the upside, coupled with price breaking above this 314.50, you can see RSI has already broken out. You'd want to see that move above 50. That could be your buy point on the short time frame, 314.50, where it had trouble yesterday getting through. If price breaks above, you can buy with a stop just below, and then look for 315.75 for starters, and then possibly up to 317 at the bottom of the gap. IWM continues its run of outperformance. Gapped higher off the morning open and never looked back. What I've done here is add a uptrend line off of the recent low. So, if you've been long, if you bought down in here or even down in here, as we move up, breaking this intermediate trend line would be your first, yellow flag. And then if this breaks, I would anticipate price coming down to check this lower channel line, where, if the strength is going to remain, that should hold there. But if it doesn't, we're right around 207, I would say, then probably going to come back here to 204, which would be an objective place to try a long. It held in these two areas. And then my preferred, the place where I think you have to be short if you're an active trader is on a break of 204, because you've got $4 $4 to $5 of downside between 204 and the top of the gap. I think that would be a nice risk reward setup on IWM, but otherwise it remains strong. I think we should be looking for long entries versus short entries as long as price stays above 204. So for instance, if price rolled over here and came down to this uptrend line, I think that's an objective buying level, and then you're just long against the channel line. As long as it stays above, you're fine. You can see RSI up here moving in, above 70. There's no doubt that IWM is extended, but it can stay extended for a long time. So I think it's foolish to try, and pick a top here, keep trying to short it and short it and short it and lose money every time. Stay long until you've got a reason not to be long. Trail your stop up, protect your profits. There always is a correction at some point. Just be ready for it, and don't get too far out on a limb. Here, we've got yesterday's action, just a steady climb all day. This little trend line here would be, consistent with the intermediate time frame trend line that I put on the 2-hour chart. If you're a super active trader and you see this breakdown here, with some red candles, I think below 210, you could try a short down to 208, but that would definitely be a place where I'd be looking to cover. And then if it didn't hold, getting short there for a run to 205. So there are some tactical places where it makes sense to try an objective short, but you've got to have price lead the way. Break a trend line, break a support level, break a support level, that kind of thing, and not try to get too cute trying to, pick a top. But notice here the bearish divergences. Price has been rising, but PPO and RSI have been falling. So that's a yellow flag that that's a setup for a trend reversal when you've got those bearish divergences in place. But you've got to have the price. You've got to have the price trigger. Bearish divergences in and of themselves are just cautionary. They're not trading alarms or triggers. Okay, let's move on to the FATMAAN or FANG names, whatever you want to call it. And instead of looking at the 60-minute charts like we normally do for active trading, I think we're getting into some territory that's going to be really, really interesting in the days and weeks ahead. Of the FATMAAN names, Facebook, Apple, Tesla, Microsoft, Amazon, Google, and Netflix, Facebook is the first one to test its 200 EMA right here at the bottom of the box. We've got a $30 trading range. Okay. So here's the setup. You're supposed to buy the 200, right? That's key support. It's interesting that it coincides with the bottom of the box. So right here at 250, we've got lateral technical support from this hold here and this action back here in the beginning, and we've got the 200. If you're bullish, the market in general, if you're bullish Facebook, you got to buy here. And you have the ability to set a very tight stop in and around the 200. If you're more bearish and you think the sell down on Facebook will continue, you narrow your focus right now to that 200, because if the 200 breaks, if there's a decisive move below 250, we've got two things. We've got, price being below the 200, which is bearish, and we've got a break of a $30 box. So both of those things put together, your technical target is going to be 220, and that is way down here, and that was the level of the original breakout. I haven't backed up the chart, but if you go back and look, if you open this chart up, 221.71 was the breakout, and we've spent all this time, especially here, consolidating. Now, if this turns out to be, a big topping structure, with the 200 breaking, this $10 gap filling, and then follow through back to technical support down to 220, that would be a really nice trade to capture. So I think on the short side, if the 200 breaks, I would be in favor of getting short, anchoring, a short position, looking out in time, and I haven't checked when the earnings are, but I would target the chain, the option chain, where the earnings announcement is scheduled, and exit the position before earnings, or at least adjust it. If you want to, if this continues to the downside, into earnings, then I would certainly book my profits. And then if I wanted to take a cheap shot on the Facebook earnings, then, you can do that on your own. That's really not my thing. But, if it's your thing and you've got, conviction about Facebook, you can play earnings, any way you want. So anyways, money's been coming out. And, during this 4-month period of time, actually more than that, 1, 2, 3, 4, 5 months of consolidation. I mean, this has been really, for Facebook, this has been pretty soggy. And you can see it's just been oscillating in a wide range, where certainly money was to be made on short-term trading. But now we're at a duration spot where you can objectively try along or wait patiently to see if it breaks for a duration short right here at this level, right at the 200. So let's move on to Apple. This is the daily chart. One thing that jumps out at me is this double top look. We had this was the high going into the stock split. It sold off, came down here for a double bottom, right? Bottom here, got the bounce, and got the double top follow through back up to the recent highs, where it has again backed off. So we've got a high here, but at lower momentum and lower RSI. So that's a recipe for a trend reversal, and we've gotten that. We've backed off this level at 137, and now we're back to trend. If this trend line breaks here, I think you're going to see a move down to 124 and a test of the 50 EMA. And then from that point, it'll be, that would be a place where I would expect it to hold. But if it doesn't, then you've got a fast move coming back to, 115 right in this area. And then if things really fall apart, back down to 107. Now, that seems, a long ways away, and it is. But if interest rates keep rising and money keeps flowing out of large cap tech and into, the more cyclical names, if that rotation keeps happening, these guys are going to use mega cap tech as an ATM for liquidity and back off of their positions. And I think we should be ready for that. Nothing wrong with the company. The company's still the same. This is all technical price action. Doesn't have anything to do with, earnings or outlooks or anything like that. It has to do with, PE ratios with interest rates rising and the stock being, somewhat soggy when the cyclicals are all taken off. People are going to chase the names that are moving and dump the names that are stagnant. And so if this level breaks, I think as a tactical trade, you can get short and look for a test of the 50 down at 124, $4 or $5 lower. And then for strategic duration trade, if price loses 124 and the 50, then you can go out in time and get your short and look for a larger move down towards 115. Again, check the earnings date. I would not hold these names into earnings. They always seem to beat and they always seem to pop, and I wouldn't want to be, trying to get too cute with a short holding into earnings. If you got the move, I would certainly be booking that profit into the earnings print. Tesla is the only one that I just kept on the 60 because I don't think we'd see too much on the daily. Here I've got this intermediate trend line off of the recent low. It's managed to hold that. I would be a buyer in here if you're nimble at 840. If it comes in here, buy that and see if you get a bump to fill this gap. But below 840, if this breaks, then I would expect a test of this upper channel line down around 815 or so. Now, I did get a couple of really nice compliments and thank yous via email on this trade here, and and then subsequently the bounce. I really appreciate you guys, giving me feedback when, the levels work to perfection. I still maintain, and this may be my own delusion, but I really trust my levels. And if you come to trust them like I do, and then focus your attention on, the execution of your trades, I think you've increased your bandwidth. I can't do the trades for you. That's for you to do. But if you have confidence in the levels, that's half the battle, right? To know the line you're shooting against so that, you can set your stop just below that level. And then if your stops are hit, you have your paper cut and you move on. But if you get the reaction that you expect, then you've got a nice winner on your hands. So short-term traders, I would key off of this intermediate uptrend line. And, until further notice, I think you've got to be leaning bullish. It's been such a strong stock. I wouldn't just be, willy-nilly, trying to short these highs because it hasn't worked. You've been losing money the whole time. So be smart about it. If you do try to get tactically short, just know your level and set your, tight stop, that if you're wrong, there's not much real damage. Moving on to the daily chart on Microsoft, I think we're, again, at a really interesting setup. We've been in this $20 trading range from 202.50 up to 222.50 for 5 months. Now, price was rejected at the top of the box. We've backed off. Price is now below the fast moving averages, the 8, the 20, and the 50, and sitting on this intermediate uptrend line. If we get a break below and a close below this intermediate trend line, I think you can, put on a duration trade, out in time, several weeks, looking out towards earnings, give it time to work. But if this breaks, I think we're going to find the bottom of this box here at 202. And notice, by that time, that's exactly where the 200 is going to come in. And then I'd be a buyer there. I'd cover my short down around 202.50 and then play long against the 200. And then if the 200 breaks, it's a whole new ball game, because then you're going to be coming down quickly, I would assume, to test this 190 breakout level. And then, price would be on the wrong side of the chart, meaning, below the 200, which is bearish, right? Once you lose the 200, you're on the wrong side of the chart. So we're going to know relatively quickly, was this just a big topping structure that fails at the 200, or does it hold the line and maintain this consolidation, get its legs under itself, and then go back up to the top of the box at 222. Amazon, very much the same idea. It's been oscillating in this box. 3,100 is your pivot. If you get a daily break and close below 3,100, I think you're coming down to 2,950. And again, look where the 200 is, coming right in here. It's at 2,900 now. I think if this breaks with momentum heading out of town, with RSI heading out of town, I think this is going to come down to test the 200 as well. So I would be keying off at 3,100 on Amazon. Google, if you use your imagination a little bit, you can see a Head and Shoulders top here. It's not perfect, but there is a neckline here at 1720 with a $50, $60 gap below. Your decision point is right here at 1720, just below the 50, and we've got two big gaps, and the 200 way down here at 1560, which is near the bottom of this gap. Take first things first. If it holds right here at 1720, you've got a nice long entry with a tight stop just below. But if it cracks into this gap, you got to flip bearish. And I would go out in time a little bit, set your stop just above, and look for a gap fill down to 1650. And then, we'll see what happens from there. Netflix. We didn't quite make the top of the box here, but this is a huge $90 trading range. Again, look where the 200 comes in, right at 470 at the bottom of the box. I think this is going to come down to test the 200, and then again, we'll have a decision whether we want to buy against the 200 or wait to see if it breaks. And if it breaks, measured move basis would be a $90 measured move from 470, which puts it at 380, way down here. So we're coming up on some really significant levels on the FANG names, and be ready. All through here has been tactical trading, buying support, selling resistance, buying support, selling resistance, chopping within the range. But when we come down to this point, I think we're going to have, something really significant on the test of the 200. And, I think by that time, we will know, how Facebook handled the 200. It may be the canary in the coal mine. If Facebook slices through the 200 like it wasn't there, then I think, in these other names, you're going to see, certainly tests of the 200, and then we'll decide what we want to do there. Okay, moving on to some trade ideas. CRM just made that acquisition of Slack, and that was the gap down here. And you can see for the past 6 weeks, it's been consolidating and drifting lower. But here again, we're at the 200, okay? Earnings is after February expiration. If this pops the downtrend line and holds the 200, I like the idea of getting long CRM against this downtrend line and looking for a move back up to 230 with the chance of popping higher with a run into earnings up to 240 to fill that gap. So what I'd like you to do is set your alarms in here around 217.50, something like that. And if you get the break of this downtrend line and the 200 holds, I like the idea of getting long into earnings and then see if we can get a pre-earnings push. UPS has been drifting lower, found some support. I was actually hoping that price would find this 155. Didn't quite make it there, but now it looks like it's on the upswing. Just recaptured the 80 MA with the 20 and the 50 just above. I think you wait right here, but if it recaptures the 50 at 166, I think you can buy it and then look for a push into earnings towards 175. So I think there's $8 to $10 there that we can try and capture on a tactical trade. And definitely if this rolls over and settles in around 155, I would be a buyer there as well. That would be a better trade location, if it falls down to here. But all that being said, if for any reason UPS were to break below 155, you got some big price voids below. And, that would first set up for a test of the 200. And then if that fails, you'd be in for a test of this gap with a potential gap fill if, there's some big market correction going on. And lastly, a new name, ID Systems. This is a very small cap company that their business model is to provide tracking services for a company's mobile assets. Think rental cars, think about, 1 million forklifts and, warehouses across the country. Any kind of asset tracking. This is what this company does. And it recently broke out to an all-time high here in the last day or so. And from this large ascending triangle. And I noticed yesterday there was 35x call buying targeted at in the money April 7.5 calls. Now it's not, off the charts volume. The stock was only seeing 15, contracts a day in call buying, but yesterday there were 400. So that's notable. What I would do, I like this long. I think, if you wanted to wait and see if you got a back test of 825, that's fine. But I think otherwise, I like the idea of getting long here, with a stop just below 825 and follow this trade of the April 7.5 calls. Now, I didn't check the chain, but you could certainly, buy a way out of the money $10 call. But I think the trade is, you either buy 7.5 calls now out in time in April, or you decide, what, I'm going to wait and see if we get a back test of 825, then I'll pull the trigger. So depending on how you want to play it, I think, either way is fine. I may take a position in this today. I like the chart. If you take a measured move, of this thing, it projects up into the, low teens on a measured move basis. So I would be willing to put some, definitely some lunch money into this trade and see if we get a push, above 10, out in time into April, that would be a nice trade. And, if you did go with the 7.5 calls, you would have, a higher delta. So you're going to capture a lot of this, price move higher. If in fact it moves higher, you're going to capture a lot of that, because the delta on those 7.5 calls will be, I would imagine, up in the 60% range. So that's all I've got for you this morning. It's 6:40 as I wrap up the video. What was I going to say? Futures are flat as a pancake, so it looks like we're going to have, a flat open unless something happens here, in the next few hours. So I think in the FANG names, we're coming up to some really key spots, and we'll be at very interesting and objective trade locations very soon, just like, Facebook is today, testing the 200. So I want to be ready for that. But the action continues to be in the cyclicals, banks, materials, commodities, travel. All those cyclical names are really running, and that's where the action is. So key off of the small caps, lean long, be ready to cover that if in fact there is a correction afoot. And I think looking forward, I think the time we really got to be careful is next week. This week is options expiration. There's a lot of technical factors at play that tend to make OPEX week bullish, or at the very least hold the line. But after all that rolls off on Friday into next week, there'll be a lot more opportunities for them to, sell some of this stuff off. So I think we've got to be really careful heading into next week. And, as we head into Friday, tighten up your positions, book any gains that you have by, rolling up, and then, think long and hard on Friday afternoon how much you want to be out there on the long side, after options expiration rolls off. So anyhow, that's a look ahead. We'll be talking more about that, in the next couple days as we approach the end of the week. So thank you very much for your time. A little longer video this morning, but I did want to cover those FANG names in a little bit more detail, because I think some nice trading ops are going to be shortly upon us. So I want you guys to be ready for that. If you're new to the channel, please hit the subscribe button and the alarm bell. That way you won't miss any of my content going forward. And then over in the show notes, there's links to the blog site where you'll find a lot of interesting and helpful articles for aspiring traders at all levels, and also a place to register for my content, where you'll get everything in a nice, neat package in your email box anytime I publish content. And as a little bonus, you'll also get an invite to our trading room, which continues to grow with a lot of camaraderie and trade idea sharing, which is awesome to see. Everybody's in there working hard. It's a safe place. It's a good bunch of traders. No judgment, no snarky attitude that tends to creep in some of the other rooms where people really aren't in it together. They're into look at me, look at how much money I made, that kind of thing. Always posting winners, but never any losers. I think our room is very well balanced, and people aren't afraid to say, hey, I made a mistake. I'm backing out of that trade that I just took yesterday. I don't like what I see. So that's trading. So that's what you want to see in a vibrant trading room, is people working hard together, but also recognizing when the trade didn't work and letting people know, that you're backing out, or whatever the case may be. So Thanks again for your time. This has been Chris Buss with Traders Profit Compass. Have a good trading day and talk to you next time.